Have we seen perhaps the short-term peak in gold at just under $2,600 an ounce?
I think for now, I think so. I released a paper earlier today where I'm arguing that a 25 basis points move probably implies some additional drop from the peaks we've seen recently. The big reason here is the gold market, particularly on the proprietary side, on the spec side, has been maximum long along with the CTAs, and the market is positioned for closer to 50 basis points than most analysts. That remains to be seen, but we think that there might be a bit of disappointment at least tomorrow. So some correction, maybe as far as 2,500 or so, perhaps a little lower. No route, because we do ultimately think the U.S. Federal Reserve will very much skew policy to their second part of the mandate under the Federal Reserve Act, which is maximum employment, and will message that they're comfortable with inflation coming towards target.
So Bart,
yeah.
Yeah, so Bart, you're saying in the next 24, 36 hours or so, if the Fed disappoints and does just 25, right, dollar's going to stay firm as opposed to get bruised or dented, and that correlation inverse between dollar and gold is still intact, you think, and that's why you think gold's going to come off?
I think it's still intact, but I think a lot of it has to do with the fact that many traders are positioned for perfection. We have a bit of a the market is positioned for 68% for a 50 basis points cut. The gold market maybe even for a higher probability. And if there's a bit of a disappointment with that 25, they might want to take some long positions off the table here. And that will remove a lot of the momentum that moved it higher. And of course, there's the U.S. dollar as well. Will probably in the forward curve disappoint a little bit as well.